Okay, guys, let's do fabulous rich. That's something that all of us want to be, and not all of us actually makes it in life. But nevertheless, let's keep the hopes up high. Assume a VAT rate of 14%. Mr. Fabulous Rich is the owner of Fab Clothing, a sole proprietor that commenced business on 1 March 2013. The accounting policy of Fab Clothing with regard to inventory states that inventory will be carried at a lower of cost or net realizable value. The cost price for the different types of inventory at year-end is calculated by applying the following valuation methods. Now, for raw material and indirect material, we're going to use first in, first out. For work in progress and finished goods, we have to use the weighted average method. Fab Clothing uses the periodic inventory system, important, for all categories of inventory and is registered for value-added tax, therefore 14% VAT. Fab Clothing has a policy to buy inventory of high quality from various suppliers. Special prices can be negotiated on bulk purchases. Two types of materials are involved in the production process, namely material silk and material lace. So that's our raw material. For the manufacturing of the evening dresses, so that's the business, Fab Clothing records settlement discounts for goods purchased on credit on the same day that the purchase takes place. What does that mean in plain, simple English? That means they make use of allowance accounts. I'm telling you that. They tell you if you're going to recognize a settlement discount at the date of purchase, you can only do that if you make use of allowance accounts. The following purchases of material took place during the financial year ended 28 February 2017. Purchases from Maxwell Traders, a registered VAT vendor. Now, okay, before we're going to get to the detail here, they give us purchases from Danny, a non-registered VAT vendor, purchases from Install, a registered VAT vendor. Then the last one is purchases from Silk Bazaar, also a registered VAT vendor. Then they tell us that the following amounts were paid, important words, for the year ended 28 February 2017. So paid means that was cash flow. Cash flow does not necessarily mean that that was expenses incurred or income earned, for that matter. Also important, during that financial year, 87 evening dresses were completed. These amounts are shown exclusive of VAT. Also very important, because usually if I give you amounts paid, you will have to remove the VAT out of those prices, because if I pay something, it includes VAT. So here very clearly they are stating that they've already taken out the VAT. Now it's wages and salaries, salaries. Now for those three, there's no VAT implications whatsoever. Water and electricity, telephone, indirect materials, and insurance. And then they give us the following balances are available. 2016 as well as 2017. So 2016 obviously opening balance, 2017 closing balance. And here we see something that is very important. Units, rand amounts exclusive of that. Units, rand amounts exclusive of that. Now, I've told you this before, whenever you do an inventory question and they give you units somewhere in the question, then immediately, guys, you revert from a general ledger approach to a table approach. So you'll see that you don't have to draw one single general ledger account in this question to answer the question, because by doing the tables, you will get all the information that you actually need in order to complete the question. Now, they also tell us that Fab Clothing uses 5 meters of material silk as well as 5 meters of material lace to manufacture one single evening dress, which is important. Why? Because if they tell us that we have completed 87 evening dresses for the year, I can now calculate what was the material silk and the material lace which was issued into the production process in order to manufacture those 87 dresses. So obviously 87 times 5 meters of silk was used and 87 times 5 meters of lace was used to manufacture all the evening dresses for the financial year. Fab Clothing ensures at all times that material for 12 evening dresses is on hand at year end. They don't tell you that there are 5 meters of each at year end. They tell you that they want to ensure at all times that there are 5 on hand at year end. So that means 12 times 5, there should be 60 meters of silk, and there should be 5 times 12, 60 meters of lace at the end of the year. Again, it's not to say that there is. You will have to check. Now, during the year, 85 evening dresses were sold. So, coming to finished goods, you will know that in your finished goods account, you will have to have cost of sales. And in that cost of sales, you are going to use these 85 dresses. What you're actually after is the cost price of those dresses. Now, what they want from you, they want you to calculate the amount of inventory on hand as at 28 February 2017. And obviously, my inventory on hand would be my raw material, which in this case would be silk and lace. It would be work in process, which they don't ask, but work in process here is very clearly 0. There they tell us 0, 0, 0, 0. So therefore, they don't ask it because they give it to you. And then our completed products, our finished goods, which is the goods that's available to be sold. Good, so the evening dresses that's on hand, which is still available to be sold. Now, we have to calculate material silk and material lace. So we're going to have 2 tables, one for material silk, one for material lace. And in each one of them, we're going to start off with our opening inventory. Now remember, raw materials is going to be on the first in, first out method. Right, so in our table for silk, we will have opening inventory 60 meters multiplied by 46 Rand per meter, and that will give us then a total price for those units. So the silk, we were starting off with 60 units multiplied by 46 Rand, which gives us a total Rand value of 2760. Then lace, also 60 meters at 60 Rand per meter. So if we're going to go back, we're going to start with lace, opening inventory, 60 meters at 60 Rands per meter, which gives us a total Rand value of 3,600 Rand. Good. Now, the only thing that we have to, all this stuff has got to do with the rest of the stuff, work in process, finished goods, indirect materials, that's got nothing to do with silk and lace. So if we're going to have a look at our purchase transactions for the year, it means that our purchases is going to be of raw materials, and raw materials being silk and lace. Okay, so let's have a look. We have bought on the 15th of July 350 meters of silk from Maxwell, which is a registered VAT vendor. Remember, we also registered VAT vendor, on credit of 62 Rand and 70 cents, inclusive of VAT. And we have to work with a 14% VAT. So if we take out the VAT, that then gives us an amount of 55 Rand, exclusive of VAT. But exclusive of all discounts per meter. Maxwell Traders offered a bulk trade discount of 5% on the purchase. So our actual purchase price was not 55, it was 55 times 95%. Because we received a 5% trade discount. Maxwell Traders has a policy of all their clients that purchases of more than 100 meters qualify for a settlement discount of 3% should they make payment in 30 days of purchase. Fab Clothing paid the account in full on 26 July clearly within the settlement period of 30 days. So therefore, they also received on the invoice price, which is 55 times 95% multiplied by 350 meters, the settlement discount of 3%. Now, let's do that one first. So if we're going to have a look here at our silk, we've bought on the 15th at 55 Rand, 350 meters multiplied by 55, 19,250. Received a 5% trade discount on the 19,250. The invoice value was the 19,250 less than 963, which we have also received then a settlement discount of 3%, which is 549. You could have, and it makes more sense for me if you take shortcut. You said, well, the initial price, VAT exclusive, was 19,259 multiplied by 95%, so that is after the deduction of the 5% discount. Multiply that amount by 97%, so that is for the further 3% settlement discount, and that gives us a total purchase price of 17,739. Then on that transaction, transport costs to have the inventory delivered to the premises of Fab Clothing amounted to 2280 and were paid to Speedy Transport, a non-VAT vendor. So therefore I cannot take the VAT out because there was no VAT to take out, because Speedy cannot issue a VAT invoice. Therefore we have to add to our purchase price the 2280 to derive at the total cost of that 350 meters of 20,019. 20,019, the total cost of 350 meters. So if we're going to work out a unit price, it's going to be the 20,019 divided by 350, which gives us then 57 Rand per meter. Good. Now the next one tells us that on 23 August 2016, we purchased from D. Danny, a non-registered VAT vendor, 410 meters of lace at 65 Rand per meter. Danny is a non-VAT vendor, so therefore we cannot take VAT out of the 65 Rand per meter. That's the actual cost price of those goods. Danny D also only sells on a cash basis, and due to the large amount of material purchased and paid for, a 7% cash discount, it's the same thing as the settlement discount, was granted to Fab Clothing. Now, so the first thing is we've purchased it at 410 times 65 Rand per meter. If we go to our lace, 410 times 65 gives us 26,650. Then he gave us a cash discount of 7% on the invoice price of 26,650 times 7%, and that gives us 1866. Now furthermore, Fab Clothing wanted the 410 meters to be cut into pieces of 5 meters each, and Danny D charged Fab Clothing a handling fee of R1.50 for every 5 meters. So therefore we're going to take that 410 meters, we're going to divide it by 5, and we're going to multiply that by R1.50 to get the total cost for cutting up it in pieces. So 410 divided by 5 times R1.50 gives us a total of 123. The total cost of this 410 meters then would have been 24,908 Rand, and the unit price would have been 24,908 divided by 410, and if I round it off, it is 61 Rand per meter. If you work to 61 Rand further on, that is what the answer will indicate, but I will also show you what your answer would have been if you've worked with the actual amount with 2 decimal figures of 60 Rand and 75 cents. Great, then they purchased on the 5th of January 2017 from Install, a registered VAT vendor, 85 meters of material silk at 142 Rand 50 exclusive or inclusive of VAT rather. So if I take out the VAT, that gives us then an amount of 125 Rand exclusive of VAT per meter. Install sells on credit and provides a settlement discount of 8% if the client pays within 15 days from the invoice date. Fab Clothing did make the payment in time in order to qualify for the settlement discount. So the first thing is our 85 meters, and it's 85 meters of silk. So if we go to our silk, we purchase 85 meters at 125 Rand VAT exclusive, gives us 10,625. We received the 8% settlement discount on the VAT exclusive amount, and that gives us 850 Rand. And then they also tell us in the question that Install is situated in Bella Bella, and Fab Clothing requested Install to transport the goods to the premises of Fab Clothing. Install added another 969 Rand, inclusive of that, to the account of Fab Clothing when the goods were delivered on 19 January. Now, we've seen that Install is indeed a VAT vendor. Therefore, that cost will be inclusive of that, and we will have to take out of that when we want to cost this inventory item. So here, 969 divided by 1.14 give us a transport cost of 850 Rand. So that 85 meters costed us in total 10,625, and that divided by 85 gives us 125 Rand per meter. The last purchase was made from Silk Bazaar, a registered VAT vendor, on the 15th of February. 25 meters of material lace at 67 Rand 26, inclusive of VAT per meter. So if we take out the 14%, it gives us 59 Rand per meter. So if we go to our material lace, here we have purchased 25 meters at 59 Rand, which gives us a total of 1475 Rand. Now, the next section is all about the payments that we've made, and none of that refers to raw materials. So we're not interested in that for the moment, but what we are interested in is the number of evening dresses that were completed. They completed 87 evening dresses, and each evening dress used 5 meters of material silk and 5 meters of material lace. So if we go to lace and we said, well, how many meters were used? And we said, well, it is 87 dresses multiplied by 5 meters, and that gives us a total number of meters used of 435. So, how many meters did we have available in order to issue during the year? We had 60 meters to start off with. We've purchased another 410 plus 410, another 25. So in total, we had available here, I'm going to write it here somewhere, 495 meters available to sell. We have issued 435 meters of material. So that means then, by just subtracting the one from the other, that we had 60 meters of lace available or on hand at the end of the year. So this here then is our closing inventory. Now, what is important that you understand, what is the basis of valuation? And the basis of valuation equals first in, first out. So therefore, it means that from the 60 meters that we have left, we will have that full 25 meters of available still at year end to our disposal. So the cost of that 25 was 1475, and there you can see that. In order to get to the 60 meters in total that we had here on hand, just want to write there available. Of the 60 meters that we had on hand at the end of the year, let's do this as well so that you can see exactly where this is coming from. Then 25 is the last purchase we have all that lace on hand. So in order to make up to the 60, it means that we still had 35 meters on hand of the second last purchase. So there was still 35 of this purchase of 61 Rand or 60 Rand 75 on hand at year end. If you've worked on the 61 Rand, it would have given you 2135. If you've worked on the 60 Rand 75 cents, you would have had closing inventory there of 2126. Now, because we also have to value finished goods, it is important that we also understand what was the cost of the goods that was issued. Now, we have issued, first in, first out, that full 60 in the first place, and the cost there was 3,600 Rand. This is now cost of material issued. Okay. Then here we still had 35 of those meters on hand, so that meant that we have issued 375 meters. At what cost? Either at 61 Rand, if you've worked on 61 Rand, or on 60 Rand 75 cents. So I'm going to just put in here 375 times 60.75, and that would have given you 22,781. Now, what was our total cost of lace issued into the production process? Now, that would have been those two together. So 22,781 plus 3,600 would have given you a total amount of 26,381. And that is direct material cost, but only for the lace. So here I've said what did we transfer to work in progress? 60 meters, it's that first 60 meters at 3,600 Rand, and then 375 meters, that's 375, so 410 less the 35, which gives us 375 at the unit price of 61 Rand per meter. Here's the 61 Rand per meter answer, and that was 22,875. So if we worked on 61 Rand, the total raw material cost of lace was 26,745. Same thing applies to the material silk. We had in total available to issue this whole caboodle here. We take 60 meters, plus we've purchased 350 meters, plus we've purchased 85 meters. So we had available here 495 meters. And that we've said is available. Available for what? Available to issue. 495. Good. Now, how many meters did we in fact issue? How many dresses were completed? They've told us that 87 dresses were completed. So therefore, if we take the 87 dresses completed once more, issued 87 dresses, and we've issued it takes 5 meters per dress. So that means 87 times 5 gives us 435 meters. Right. Again, how much do we have on hand in closing inventory? Obviously the difference there, and that difference again being 60 meters. Remember that somewhere along the line they said they always want to have at least enough material on hand in order to make 5 dresses. So 5 dresses or 12 dresses, 12 dresses times 5 meters per dress, and that gives you 60. So they've just made the 60. But you have to do the test. You cannot assume that they have 60 meters on hand at the end of the year, because you don't know. So you have to do the calculation in order to see whether they in fact had 60. That is the minimum that they want to have on hand. but nothing prevents them of having more, or nothing prevented them of having less. I mean, if something has happened, and let's say there was a late delivery and they're still waiting for something to be delivered, but as at year-end they had less, you had to calculate how much they had. Again, first in, first out. So that 60 would have come all out of the last purchase of 125 Rand per meter. So our closing inventory value is quite easy. 60 times 125, which gives us a total of 7,500 Rand. Now, what was the cost of material issued? The first thing is that 60 meters that we had in the beginning of the year, obviously that was issued, and that was 2760. Now, how many material did we use? We have used 435 meters of material. So therefore, we've also used up that full 350 meters there. Let's put that there. And the cost of that 350 meters was in total 20,019. And then obviously we have also used some of the last batch. We have on hand at the end of the 60 of that 85. So we've also used 25 meters. Come on. We also used 25 meters at 125 Rand per meter, which gives us then a total of 3125. So in total, the cost of material issued is the sum total of them, all 3125 plus 20,019 plus 2760, which gives us 25,904. Oh, for heaven's sake. 25,904. Good. So if we look at this one here, we said, well, that was our closing inventory, 7,500, which we've already calculated there. It is 7,500. And then what we said is transfer to work in progress. So that is the material issued, 25,904. And that is what we've calculated there, 25,904. Let's go differently. Okay. Great. Now we can continue and we say, what do we have now? We have two input costs into the work in process. The first input cost is my material lace that we've issued, and we have worked that out. The material lace that we've issued is 26,475, or if you've worked on 60 Rand 75, 22,781. Material silk, that is the one that we've just calculated, 25,904. So work in progress, there it is, 26,475, 25,904. If you've worked with my material lace, that can either be, if you didn't round it off, 26,381 and 25,904. Now we can continue back to the question. They've made the following payments: wages and salaries to staff involved in the designing of evening dresses, 350,000. Wages and salaries in the manufacturing process, assembling the dresses. Now, I would say that is two major inputs in order to manufacture the evening dress. So both of them I would regard to be direct labor costs. So our direct labor costs would have been 350 plus 400, being 750,000. Great. Then a salary to the general manager responsible for general accounting and staff-related matters. It's got nothing to do with manufacturing, guys, so therefore that 235,000 does not form part of the cost of goods manufactured. Water and electricity, 50% relates to the factory, so 37,500. That is in fact an overhead cost, so here overheads, water and electricity, 37,500. Telephone, 10% is to the factory, so 1,500. That also an overhead cost, 1,500. Then indirect materials, 20,700, but watch out for this one because we had opening inventory, exclusive, 920, Then we bought 20,700 worth of indirect materials, and at the end of the year, we still had 825 Rand of those materials on hand. So here we cannot add to our overhead cost 20,700 because that was not the cost of indirect material issued. The cost of indirect material issued was 920 plus 20,700 less 825. So there it is, gives us a total of 20,795. I'm not interested in what did we purchase. I'm interested in what materials were issued. 20,795. Then insurance, 50% relates to the factory, so we could work that one out. And then furthermore, don't watch out for this one. We had, in the beginning of the year, prepaid insurance of 2,900. Then we paid a certain amount for the year, and then we had prepaid. Included in that amount of 71,000 was 3,500 Rand, which relates to the next financial year. So 71,000 times 50% less 3,500 plus 2,900 gives us a total of 34,900. Now, whilst I'm thinking of this, actually the question should have made it clear that the 3,500 and the 2,900, oh, they did, only in terms of the factory. Only in terms of the factory. Otherwise, you would have had to take the 50% on those two amounts as well. So they say there it's only to do with factory, so therefore the answer is 100% correct, 34,900. Now, if I add all this together, there were no work in process in the beginning, there were no work in process at the end. So that means in total, that was the total manufacturing cost, 897,074. How many dresses did we actually manufacture? Manufactured and completed 87 dresses. So therefore, that 87 dresses were transferred to completed goods. Now, let's do finished goods now. For finished goods, the first thing that you should realize is that there is a different valuation methodology applicable on finished goods. Finished goods, we're going to use the weighted average method. Now we're going to start off with our opening inventory. We had 3 dresses on hand in the beginning of the year. The cost was 9,500, must be very glamorous dresses, 9,500 Rand per dress. So again, we don't need in this question to use the GL accounts at all. We work units, unit prices, total value. And in order to do that, it is easier to work in table format than trying to do it into a GL account. So we had in the beginning 9,500 times 3, 28,500. How many did we complete? We completed 87 dresses and there was a total cost 897,074. So here, completed 87, 897,074. Weighted average method says, how many dresses did I have available to sell? I had 90 dresses available to sell. What was the total cost of those 90 dresses that I had available to sell? The total cost was 925,574. Good. What was the unit price? Our weighted average cost would have been now the 925,574 divided by 90, which gives us 10,284 Rand per dress. How many dresses were sold? They've told us here 85 evening dresses were sold during the year. So we've sold 85, so how many do we have left at year end? At year end then, we had 90 available to sell. We've sold 85, so therefore we have 5 evening dresses left. At what price? At the weighted average price of 10,284, which gives us 51,421. Just for interesting sake, what would our cost of sales have been? Which if I ask you here to do the income statement, for instance, I could have asked you to do the gross profit section of the income statement, and I could have asked you to do the disclosure of inventory in the statement of financial position. So cost of sales would have been 85 dresses multiplied by the weighted average cost of 10 to 84, and that equals 874.40. Okay, so make sure that you also can do both closing inventory as well as cost of sales in any future questions that you're going to do, or the possible questions that you can get in a test or exam.